Good evening, everyone, and welcome to my technical analysis video. My name is JR. I'll be doing technical analysis on both gold and silver, as well as the Dow Jones. Today is the 3rd day of November, after market hours, 7:54 p.m. Eastern Standard Time. I wanted to get this video out. I'm going to do a long-term video here. I'm going to show the quarterly charts, which I normally don't show. I'll show the monthly, weekly, and daily chart as well on all three, gold, silver, and the Dow Jones. Okay, so currently, again, this is a very, very, very long-term time frame. Again, each candle does represent 1 quarter of the year. Okay, so a very long time frame. I mean, this rally here started back in 2001, extends all the way back to 2011, and obviously we have this drop. Now, the reason why I decided to do this long-term time frame is because of this drop here below 1180. All right, so now we have to look for certain areas where we feel that we are going to find some support. This being the first level here, okay, between 1050 and 1157 roughly. Okay, we've already found some support here on Friday, as well as I believe yesterday. I think the lows so far have been 1161, so we still haven't tested this zone here. But again, you guys know how my zones work. My zones work really, really, really well. And as of now, at least for reactions, right? So this is the reaction level here that I'll be looking for, anywhere between 1045 to around 1157. For those of you who do not have 10, 15, 20% of your investment portfolio in the precious metals market, and this zone should be where you want to continue to accumulate. All right. We also have this flip zone here. Okay. And this flip zone is roughly at around 1032. Okay, so again, you're going to have this buy zone here. Now, again, anytime you enter one of these zones, anytime you enter one of my buy zones or one of my sell zones, this will be a sell zone. I'll fix this up here that we make sure that we understand that this is a buy zone. Anytime you enter the green zone, you do not want to sell, you only want to buy. Okay, this is your buying zone, this is your selling zone. So anytime you buy in this zone here, you want to wait for, this will actually be your first zone here. All right, so this is your first zone here on 1285, and of course this will be your second zone here between 1389 and 1436 with central banks. Now, what we saw here on Thursday, and I want to make sure that everyone understands that Dow Jones and the precious metals and the dollar, the way they're trading is not based on fundamentals. They're not based on a strong economy. The Dow Jones is not trading at 17,000, almost 400 points, not because of a good not because of a solid economy, but because on Thursday, the Central Bank of Japan announced that they're going to do more quantitative easing. Okay, the Central Bank of Russia also raised their interest rates to 9.5 from 8%. This is because they are trying to fight inflation while we are trying to fight deflation. And when inflation goes out of control, it's extremely difficult to get inflation under control. So again, the next coming years will be very interesting for us. We have put over $5 trillion in our balance sheets, and I think it's only a matter of time before this whole thing falls on everyone's face. But let's get back to these technicals here. Now, I want to point out this right here. This is the volume. And we've noticed that ever since this market began to drop, the volume has been going down. Anytime you have a market going in one direction, you want the volume to follow that direction. So for example, if you have a market that's falling, you want the volume to go up. And the reason why you want the volume to go up is because that's going to show that there's a lot of interest in that rally, and the rally will continue. This is probably the reason why the market started to run up in 2001, and it ran roughly for 12, 13 years. Okay, simply because we had a rising volume. See over here back in 2008, yes, of course, during the 2008, a lot of people went into cash. The volume goes down, but again, the rally resumes roughly right over here. And what happens to the volume? You have a nice healthy volume to the upside, and that's a healthy rally. Okay, keep note of that because I want to show the Dow Jones. Dow Jones has absolutely no volume, which does not suggest strength. As a matter of fact, I've came on here just to show you guys here. Investopedia, they have all the any questions as far as technicals. You can usually get your answers here at investopedia.com. Okay, but how to use volume to improve your trading. I'm not going to go over the whole thing, but we can talk about volume and market interest. A rising market should see rising volume. Buyers require increasing numbers and increasing enthusiasm in order to keep pushing prices higher. Increased price and decreasing volume show lack of interest, and this is a warning of a potential reversal. This can also be hard to wrap your mind around, but the simple fact is that a price drop or rise on little volume is not a strong signal. Price drop or rise on large volume is a strong signal that something in the stock market has fundamentally changed. So again, this rally here, unsustainable. Let's check out the Dow Jones here real quick. I'm not going to do the Dow Jones analysis until I finish gold and silver first, but I did want to point out here that the volume on the Dow Jones is decreasing while the prices are going up, and this is absolutely no bueno. Please be cautious with this rally. I do not believe in this rally, especially given the fundamentals, right? US and 17, almost $18 trillion in debt. So again, this is a non-sustainable dip, and the Dow Jones has a non-sustainable rally. Okay, so again, back to gold here. This is the zone where you want to continue to accumulate between 1157 all the way down to 1043. That's your quarterly chart. Again, I do not believe that this this dip is sustainable. That's the quarterly chart. Let's look at the monthly chart. Monthly chart testing this long-term trend line. Every time we've touched this trend line, we see a big bounce. So it could be that we find this bounce here and start going higher from here. Now the dollar is extremely strong, so I don't think that's going to be the case. I do think we will penetrate this zone here, but I could be wrong. Only time will tell. But again, I do know that this zone is a beautiful zone to get in. Again, especially if you don't have a decent percentage of your precious metals holding, right? Another thing I'd like to point out is these Bollinger Bands. These Bollinger Bands, anytime you have a price move, you want these Bollinger Bands to expand. If you're going to have a rally, you want these Bollinger Bands to expand. And that's what you saw here back in 2013 when the metals broke through this key significant level of 1520, right? So what you had was this Bollinger Band being this giant purple thing that I have going across these prices. So these Bollinger Bands, you see how this one went down and this one went up? That's a solid rally to the downside, right? And what we're seeing here is you saw this breakthrough 1181. And as of now, these Bollinger Bands are still not expanding. So this could be a false rally, though I would not count on it, right? But again, the Bollinger Band here, really solid support here at around 1138. Actually, that's your Bollinger Band. So I do expect to find support here if this market goes below the 1157 zone, which was a zone that I've been speaking of for quite some time. Now, so far on Friday and on Sunday evening, we did see a low of 1161. We have yet to test the 1157 zone and break that zone, okay? If we do fall, this is the level where you want to get in. You have a really nice upside potential, okay? Also keep in mind that the Production cost for gold is at $1,200, so below prices, and with this beautiful zone here and these Bollinger Bands, a lot of confluence here, and this trend line, a lot of support here for gold. So I don't expect this market to continue to tank, at least for now. We do want to see if this 1157 is going to hold. If it does hold, this could be a false rally. Again, I wouldn't count on it though, because the dollar is extremely strong right now. But again, this is your zone where you want to buy 1150 all the way to 1157. That's your monthly chart. Weekly chart here. Okay. Again, broke through this key level here, 1181. And as I've stated here many of times, this is your zone here that we're looking to go in. You get in this this zone here. There's a good short-term trade. You might be able to take it back to the high 1100s. Might see maybe some price action similar to this. Maybe come in this zone, come back up. And if this zone is going to break, I'd like to see a move back up and then come back down. That's usually how these zones play out. But this zone, you will find some reaction here between 1124 and 1157. Okay, this will be your next zone here. Okay. This will be your next zone here roughly, and this will be your last zone. Okay. Again, though I do not expect prices to go down this far, we have to be realistic about these technicals. The dollar is extremely strong, so we could see further move to the downside. Again, targeting roughly around 1045. Again, you have a really nice flip zone here. So between 10 and 1050, I would probably say that's where we're gonna be looking to find a floor here on these metals. Okay, that's your weekly chart here, and your daily chart. As of now, this is your sell zone up here, and we have broken this through this significant level, 1183. Okay, silver on the monthly chart, on the quarterly chart. Okay, this is your silver quarterly chart here. Okay, beautiful zone here between $14.65 all the way up to $18.65. Anytime you buy in these zones, you do not want to sell in these zones. Again, just because these are buy zones. Okay, I'll make them green here just to highlight that they are green for buy, red is for sell, right? Okay, so again, really nice zone here. And of course, you have the second zone over here. On your monthly chart, again, we can kind of see here that the volume is coming down here slightly. So again, another indication that this rally to the downside is not sustainable as the volume goes down. Okay, but if this zone does not hold, then we'll be looking for this zone to hold. I would probably look to hold at this trend line here. Roughly at around 1360. I can't imagine this thing is going to go much further down than this if it breaks this zone. But again, at the present time, I do not expect. I'm looking to buy here actually at the low 15s, maybe around $15 with a stop loss, maybe at around 1250, and looking to take this thing back up to at least 19. So again, beautiful risk to reward. You're risking about $3 to make about $5. Okay, very, very, very nice. That's your quarterly chart here. Let's go to the monthly. Monthly chart here, we can see that we are still above this trend line here. This could be, and we're also testing the Bollinger Bands that I spoke about on the gold chart. Okay, so this line and a combination of this Bollinger Band around 1586, this might hold the metals up, but again, the dollar is very strong. This 20-day moving average is still pointing to around 5 o'clock, which is not positive. We definitely want to go above that 20-day moving average before we can start thinking that this thing is going to be bullish. Okay, but again, this is a very, very nice zone that does have a confluence here with this trend line. So again, any dips at this point, I would probably expect a dip no lower than, let's say, the low 14s, high 13s. Worst case scenario, 1350 around this line. And again, once you're in this zone, you're buying, you're looking to take some profits at around $19 minimum. Okay, so very, very, very nice risk to reward. Okay, at this point, these metals, the production cost for silver is roughly 18 to $22. You don't necessarily want to make medium-term trades. You either want to make either short-term trades or very long-term trades. At this point, I wouldn't mess around with this metal. I would probably just continue to stack, and below $11, below $12, I would probably stop stacking and just see what the market awaits for you. But again, I do not at all expect prices to go down this far. But again, 1465, that would probably be the best level to get in if we do hit these prices. But again, this Bollinger Band still not expanding, so this could be a signal of a reversal. We'll see what happens. This is a monthly chart, so it will take some time here for us to see what's going to happen. Again, a sell zone over here between 1721 and 1802. In order for us to have this bullish chart, we do have to come above this level here. That will make this chart a little bit better. But ultimately, what we want to do is we want to go above this 20-day moving average right over here at around 1890. Okay. Again, beautiful zone here at around 1468 if we go far down that far. Okay. Again, great risk to reward. You're risking about $2 and you're looking to make around $4 to $5 here. Great risk to reward. Your daily chart, again, we're finding some support here on that long-term trend line coming back from all the way to 2011 highs of $49. It does look like right now we are testing this Bollinger Band here. And as of now, this is your sell zone between 17 and 1801. Okay. Let's look at the Dow Jones. And as I said before here on the monthly chart, on the quarterly chart here, we can clearly see that this volume is decreasing. This is a decreasing volume, and this is definitely not good for this rally. And you also want to keep in mind the Dow Jones has not seen a decent dip in a very, very long time. The last decent dip that we saw was back in 2012, where we saw the Dow Jones correct roughly 19%. So again, definitely not a sustainable rally here. And I warn everyone to have extreme caution, because again, this is not a market that you want to be chasing. Again, no solid fundamentals, unemployment's terrible, no solid economic data to back anything that's happening with this market. What you've created is a higher high, right, and lower lows. This is called a broadening formation. Some of you have heard me mention that plenty of times. And broadening formations usually end up with lower lows, because that's what you're building. Higher highs, lower lows. This is extremely bearish for this market, and I would probably say that in the next 3 to 4 years, this market is going to see a huge decline. Especially with this indication of this volume. Stochastics are extremely oversold. So again, I would probably say 18,000, 18 and a half, no more. I definitely don't see $20,000 in the horizon, especially with this low volume. But who knows? Again, these markets are easily manipulated when the volume is this low. Okay, this is your monthly. This is your quarter. That was your quarterly. This is your monthly chart. Again, we haven't really seen a really solid correction in quite some time. We saw a 19% correction, and ever since then, we have not seen a solid correction in over 2 years. Back in 2012, we saw this correction of 9%, but we still the first time we saw a 10% correction was roughly was a week or two ago. And it was just extremely chaotic. We saw the move down to about 10% and immediately recovered. So again, I warn everyone and I caution everyone, this is not a sustainable rally. So please be careful out there. Again, volumes going down, broadening formation. Broadening formations are very bearish by nature. Okay. And of course, this is your weekly chart. Not much difference than every other chart here Again, really solid candle, so it's still more upside here of this market. I also want to make sure that everyone understands that this rally is not a rally that I see that's a healthy rally, not only because of volume, but because also, like I said earlier, this is really all about central banks across the globe. ECB right now at negative interest rates. The Russian bank is raising interest rates, or just raised interest rates on Thursday night, in the middle of the night, and the Bank of Japan decided to print more money. So as we're ending QE, other countries are beginning their QEs or adding more to their balance sheets. And again, this just seems to be a central bank game. Okay, and that's about it. I hope you guys enjoyed the video. And great opportunity. I hope everyone takes advantage of it. And we'll see you guys next time. Bye-bye.